After blockchain explorers discovered an obscene transfer, the cryptocurrency markets were startled awake. In the span of 60 minutes, 15 trillion SHIB tokens disappeared. There will be no slow drip, no small-town fires. The supplies was swept away in an instant, like a tsunami. The SHIB community was on the edge of their seats as on-chain statistics flashed across screens, leaving them to wonder what this unexpected deflationary shock could signify. Was it a mega burn that was planned by those on the inside? A clandestine amassing by whales asserting their dominion? Is it possible that something much more remarkable is lurking over the horizon? Coins were divided between cold storage wallets that had just been created and addresses that were marked as dead in the transaction log, safe deposit boxes where money goes to sleep for eternity. There was a sense of intentional deflation in the burn-to-dead wallet transfers. Strategic buildup was communicated by the move to cold storage. In any case, the 15 trillion tokens are no longer available for trading. Less supply chasing demand can cause price fluctuations in the cryptocurrency market. But why was this massive shift motivated? The market's genuine architects, the whales, have long controlled SHIB's direction. Silently controlling vast sums of tokens are these well-off players. Big rallies or dumps are frequently foreshadowed by their behavior. This wallet had already surfaced during prior accumulation episodes, each time indicating impending big rallies, according to analysts tracking historical patterns. With 15 trillion tokens safely stored, the previous inquiry has arisen again. Awaited the next famous surge, were whales already designing it? How strangely timed it was. Buyers and dealers were caught in an uncomfortable standstill as SHIB churned beneath a stubborn ceiling near 4015. As price movement became more quiet and community talk became more frantic, traders were increasingly impatient. The anticipation of a breakout eradicating previous resistance is the single most important factor in narrative-driven markets for creating a sense of urgency. Speculation and anticipation go into hyperdrive when supply abruptly contracts by such a massive amount. Initially, the price remained unchanged, suggesting that the market was taking a moment to consider the consequences. After that, purchase orders flooded in, trading volume increased, and SHIB advanced steadily, eventually touching its long-held resistance. The change from cautious to aggressive purchasing demonstrated a societal realignment. The new reality that tokens are significantly rarer hit holders like a ton of bricks. Many times, fear of missing out (FOMO) becomes a reality once it starts. In response to the obvious momentum that the whales are setting up for, a swarm of buyers hastily enters the market. A number of hypotheses surfaced practically immediately. The most prominent theory proposes that the development team and key holders planned a clandestine mega burn, an accelerated deflation strategy to alter the supply curve of SHIB. Project Phoenix, a burn mechanism with the potential to send out billions of tokens every week, was hinted to in leaked internal documents. It would be highly prudent for those in the know to preemptively deplete supplies before this system went live if they knew it was going to cause a market parabolic move. The idea that whales were just preparing for the long haul is another theory. These major players have shown their undying faith in SHIB's potential by putting tokens in cold storage. By removing tokens from circulation, this kind of intentional hoarding reduces supply without alerting retail traders. The price will skyrocket for those who got in early as regular investors rush to purchase as supply becomes scarce. The speculation about a hidden alliance has only served to heighten the tension. In private channels, rumors have been circulating about potential partnerships with DeFi behemoths and integration with big payment networks. Speculative SHIB could soon become a practical bridge currency, according to industry insiders, who are predicting an impending revelation that would reveal its true potential. Binding such agreements to recent deflationary acts is a tempting proposition in markets where unexpected partnerships can lead to skyrocketing gains. From a technical perspective, SHIB's chart had been subtly forming a triangle. The flash burn, a trend that market participants often link with approaching breakouts, served as the initial event. The pattern was confirmed and technical buyers were invited to increase their bids when the price approached 4015 with above-average volume. If SHIB maintains its momentum and breaks beyond that barrier, the next objective near 4020 will become visible. Then at 3090, zero deletion becomes an attainable goal. Scarcity plays a significant psychological role. Holders endured months of aggravation as they saw seemingly static supply dynamics despite regular burning. Overnight, that equation was changed by a single incident. Investors experience the innate fear of losing out FOMO when they realize that a window of opportunity is rapidly slipping away. With the appearance of each green candle, the asset's value skyrockets, drawing in both short-term traders and those with a longer-term investment horizon. One can find a route map in historical precedent. In May 2021, SHIB shot up hundreds of % in a few weeks after a concerted burn by Vitalik Buterin and subsequent whale accumulation sliced trillions of tokens. You won't believe the similarity. The value of SHIB was redefined as a result of catastrophic deflation, the confidence of whales, and the momentum of narratives. The stage seems to be set for a similar orchestration, and although history seldom repeats itself word for word, it frequently rhymes. But care is key. You can expect to win big or lose big in the crypto sector. As insiders stockpile and then sell into retail excitement, redistribution stages might be obscured by sudden boasting about whale-led advances. Quick reversals can be triggered by profit-taking at critical resistance levels, surprising those who were late to the market. Exchange inflows and outflows should be closely monitored by traders. It might be the end of the run, not the beginning, if tokens pour back onto MarketBuck. In terms of the future, Shibarium, the Layer 2 network that SHIB is built on, is still in the process of maturing. There has been an explosion in the number of transactions, and new decentralized applications are emerging. Alongside SHIB's utility narrative, which is becoming more compelling daily. A potential synergy between technological advancements and deflationary economics, which occurs when utility meets scarcity, may result from the recent mega burn and forthcoming feature announcements. In order to drive continuous growth, fundamentals and sentiment are in sync. Now that the record 15 trillion token purge has occurred, one question lingers at the center. Is the explosion something you can handle? Whales as placement proof. The unexpected impact on supplies and the strong belief among the community both indicate the possibility of a massive breakout. Chapters to come may witness zero deletion and previously inconceivable accomplishments if SHIB can maintain above 4.015 and capitalize on the momentum. Chances appear and disappear at a dizzying rate in the highly volatile world of maybe now SHIB will go from being a legendary meme coin to a deflationary force with actual movement in the market. The market is currently at a turning point, so you can either get in on the action or sit on your hands. Indefensibly, the clock has started ticking on what will surely be an explosive rally, and history is being made.